Hello and welcome back to another Fratarcangeli Friday Market Update. I just returned back from the Forbes Top Advisor Summit in Vegas that we go to every October. It's the Super Bowl of our gathering where we all come together, meet with top analysts, and just talk about where the markets are, what our headwinds are, and what we can do to improve as an industry and as well as our team looks to improve. The main topics were the Fed, the US dollar, and AI, and how these factors are going to affect us in the coming year. Before I touch on a little bit of that, let's talk about the week behind us. We just had financials report earnings this week, all beating and meeting expectations. Even though outlook as well as earnings were positive in the financial sector, the market gave us a mixed reading relative to the market returns in financials. Overall, we're looking for earnings to really kick off next week. And what's interesting is we're looking at earnings estimates from the beginning of the quarter to where we're at today have actually increased in what companies are saying they're going to make. The outlook and the projections for earnings are also being lifted up and looking for better earnings outlook for the coming quarter. That being said, earnings has been the catalyst. If we reflect back to a year ago, we were hearing things like recession. No question we were going into a recession, and what we've actually seen is robust earnings. As mentioned in previous discussions, we're in our fifth year of double-digit earnings growth, and the outlook and the projections for the coming year are getting better and better and better. The sectors that are leading, technology, financials, industrials, as well as consumer discretionary, seems to be where we're seeing the strongest outlook in earnings. 7 out of the 11 sectors are all posting better than expected earnings outlook, and we'll see how that delivers starting next week. In addition to that, we still have the issues with trade. I know that our president was meeting with President Xi as well in China to see what they can do on getting some type of a trade deal done. The market's reaction to some of the uncertainty that started last Friday was heightened with volatility, but we saw the market recover earlier this week, and we should end the week with a positive week again with market return. So we'll see how that plays out. And of course, we have the shutdown that we're going on 18 days, which has obviously been longer than the average of 10 days. We're watching very closely. Some of the takeaways is the government has been backfilling for any issues that have arisen due to the shutdown, so some positive momentum there. And we're also seeing some of the spending that some of the government divisions that we weren't able to see with the government turned on being addressed as well. So some little bit of positive news relative to the shutdown, but we'd all like to see this come to an end and come to a conclusion. So that being said, as we've seen the market volatility heighten in October, I think it's buy on the dips, as we've talked about in the past, continue to stay focused on the future. And I'll mention a few things that I picked up in the Vegas trip over the last 4 days. We talked to BlackRock. We talked to many of the private equity firms out there, including KKR. The main outlook is very positive. AI being the catalyst, technology being the catalyst, companies becoming more efficient, the earnings that we're seeing evolve, and the projections as well as what we've seen so far this year and the expected Q3 has all been sort of looked at as efficiencies and companies becoming essentially more profitable while using and spending less. And that seems to be the thing that we're looking for in the future. And if you think of what AI has done, artificial intelligence, a year ago, been able to think 10 times faster than a human brain. Fast forward to today, we're looking at artificial intelligence being able to think 400 times faster than the human brain. And what we anticipate coming is something that we can't even fathom. So the efficiencies that we're going to be able to endure due to AI is something that I think the markets and the economy and we will personally benefit from. So I feel that the future is very bright based on my takeaways from this last week, and I'll let it settle in a little bit and I'll come back to you with more detail. I appreciate you tuning in, and I look forward to talking soon. Bye for now.